Hi everyone, and welcome back to Investment Research. I'm Simo, your equity research analyst. Today we are doing analysis of Micro Devices Semiconductor, ticker AMD, a company that continues to dominate headlines across the tech world. The semiconductor sector has been one of the most dynamic parts of the market in 2025, and AMD is sitting right in the middle of it, benefiting from massive growth in artificial intelligence, data centers, and high-performance computing. Let's begin with the basics. AMD closed the session around $128 per share, down roughly 1.6% on the day, with trading volume exceeding 36 million shares, indicating strong market participation and investor attention. Over the past 12 months, the stock has moved between a low of about $93 and a high near $182, showing just how volatile this name can be when sentiment shifts across the chip sector. Now, turning to fundamentals, AMD's growth story remains solid. The company is expected to report third quarter revenue of around $8.7 billion, reflecting an impressive 28% year-over-year increase. This growth is being driven primarily by strong performance in the data center and AI segments, especially through the rapid adoption of their MI350 and MI325 accelerators. These chips are being used to power advanced AI training and inference workloads, which puts AMD in direct competition with NVIDIA's H100 and B100 architectures. In addition to data centers, AMD continues to see strength in its client and gaming divisions, supported by the new generation of Ryzen CPUs and Radeon GPUs, which have gained market share from Intel and even partially from NVIDIA in the mid-range graphics segment. The company's embedded division, which includes chips used in automotive, networking, and industrial systems, remains stable, though growth has slowed slightly due to weaker macro demand in industrial electronics. From a valuation perspective, AMD's stock has become far more reasonable compared to the extreme multiples seen during the 2021 to 2022 period. The company currently trades at a forward price-to-earnings ratio of about 82 times, down from over 140 times last year. This may still look elevated, but when you consider the earnings growth rate expected over the next 2 years, it suggests that investors are pricing in long-term confidence in AMD's AI and data center roadmap. Now let's talk about what analysts are saying. The sentiment on Wall Street remains mixed but cautiously optimistic. UBS has reiterated a buy rating on AMD with a price target of $190, citing the company's improving position in the AI accelerator market and its to-win share from NVIDIA in cloud infrastructure. Goldman Sachs also remains positive, highlighting the continued strength of AMD's EPYC server processors, which are increasingly being adopted by hyperscalers such as Microsoft Azure and Google Cloud. On the other hand, Bernstein and Zacks have warned about potential margin compression, especially if export restrictions to China continue to tighten or if pricing competition intensifies in AI chips. Speaking of that, one of the key risks AMD faces right now comes from geopolitical exposure. The company recently disclosed that new US export controls on high-end GPUs sold to China could result in revenue headwinds of nearly $800 million. That is a major factor to watch because China represents a meaningful portion of AMD's data center sales, and any further restrictions could directly impact the top line. In addition to that, insider activity has drawn some attention. On October 15th, AMD's Chief Technology Officer Mark Papermaster sold more than $4.3 million worth of stock. Insider sales are not necessarily negative, but they can reflect a perception that the stock's valuation is near fair value in the short term. Let's move to competitive dynamics. AMD's greatest challenge continues to be NVIDIA, which currently leads the AI accelerator market by a wide margin. However, AMD's recent momentum suggests that it is beginning to close that gap. Its MI350 and upcoming MI400 series chips have received strong early reviews for energy efficiency and cost performance ratio, two critical factors for hyperscale customers that are trying to control AI training costs. Meanwhile, AMD's acquisition of Xilinx continues to strengthen its portfolio, enabling integration of programmable logic into data center solutions, which improves flexibility and product differentiation. When we talk about the overall health of AMD's balance sheet, it remains strong. The company holds over $6 billion in cash and short-term investments, with manageable long-term debt of roughly $2.5 billion. Gross margins currently sit near 52%, and management expects them to expand slightly into the next quarter as high-margin AI chips start contributing more meaningfully to the revenue mix. So, what about the outlook? Let's break it down into three cases. In a bull case scenario, if AMD executes well on its AI roadmap and continues capturing share from NVIDIA, the stock could climb back above $180 within 12 months, driven by accelerating earnings and margin expansion. In a base case scenario, assuming steady but not spectacular growth, AMD may hover between $135 and $155 as investors wait for more visibility into 2026 demand and broader adoption of AI chips. In a bear case scenario, if export restrictions tighten further or if macroeconomic conditions weaken, AMD could easily revisit the $110 to $115 range, especially if earnings growth slows or if competition in GPUs intensifies. From an investor's perspective, AMD is not a company you buy for dividends or stability. It is a growth stock, pure and simple, and that means it carries volatility. But it is also one of the most promising plays in the ongoing AI and semiconductor transformation. For long-term investors who can tolerate short-term price swings, AMD represents a high-quality opportunity with strong management, a solid balance sheet, and a clear strategic vision. In my personal view, AMD remains a buy on dips, especially below $120, as long as the company continues delivering on its data center and AI growth promises. The long-term story here is about transformation, innovation, and the gradual narrowing of the performance gap with NVIDIA. That wraps up my analysis for today. I'm Simo from Investment Research, and if you found this helpful, make sure to like the video, subscribe for more deep dive equity insights, and tell me in the comments if you believe AMD can outperform NVIDIA over the next year. Thank you for watching, and I'll see you in the next analysis.